Awesome. All right. Hello, everybody. Hello on Zoom event. Hello on hopefully live stream on LinkedIn and Twitter. If you're joining us from LinkedIn and Twitter, welcome. This is the second panel of the day as a part of a Stockcards Financial Creators Summit. My name is Hoda, Mehr, founder and CEO of Stockcard, your host for this panel. This panel is something I've been expecting or waiting for all day or all since we've been planning. We have three guests, two of them already joined, and hopefully our third guest is going to join. I'm going to let them introduce themselves, and right after that, we'll jump into whether creators, financial creators, can make the jump from being a creator to become a fund manager. And that's the billion-dollar question of the day. So maybe I start from Patrick. Do you want to go ahead and say hi and introduce yourself?
Sure. Hello, everyone. My name is Patrick Cleary. I'm the CEO of ETF Architect, which is an offshoot of Alpha Architect, an asset management firm. And we basically help people and creators launch ETFs. So I'm very bullish on creators becoming asset managers. And in a prior life, I was a consultant with BCG, and I served in the Marine Corps for 4 years.
Fantastic. Thank you so much. Brian, do you want to go next?
Sure. Hi, everyone. I'm Brian Thorpe. I am the founder of Wealthtender. It's a website that is focused on connecting people to the best financial professionals and educators for their individual needs. Been working at that for the last couple of years. And prior to that, was the head of the key account team for Invesco. For 22 years at Invesco, led the global key account team there, and had a lot of experience working with our PowerShares and later Invesco ETF product line. So very excited to be participating on the panel today.
Perfect. Thank you, Brian. Thanks for having you. Thanks for being here. We have a third guest, Perth Tolle, who is trying to connect, but she hasn't been able to connect. Shama, if you are hearing me, could you connect with Perth on email? And she's trying to log in. Somehow she can't join this panel, but we're gonna, since we only have 30 minutes, we're gonna get started on the questions, and hopefully we can have her join us soon.
Yeah, sure.
So the reason, guys, I wanted to have this conversation with you who know the financial services industry inside out, right? You know what is happening inside. What does it take to become a fund manager and manage a fund? So instead of bringing a bunch of content creators, the financial creators, to talk about them, whether what's going to take for them to run a fund, we wanted to have a conversation with people who know the industry. So that's really, feel free to put the concept on the chopping block and tell us what may not work. But the idea is for the hundreds of financial content creators that work with a Stockcard to really understand what's going on and get a sense of what does it take for them to, if they want to make that transition. But before we even get there, so Patrick, maybe I start from you. You said you were very bullish on sort of this content creators becoming the next generation fund managers. What do you take of this whole rise of financial content creators, retail investors? How do you think this is evolving the financial services industry?
I don't think it's evolving the financial services industry. I think it's completely blowing up the financial services industry in a good way. So why am I bullish? I'm bullish because I have witnessed firsthand how financial content can be used to outcompete, out-innovate, and out-publish deeply entrenched players in the marketplace. I'll use my own firm as an example, Alpha Architect. We launched some quantitative value ETFs in 2014, and our competitors are the most overly capitalized asset manager on the planet, iShares, and we're competing against a nonprofit, Vanguard. So between those two dimensions, it's a pretty horrible place to be if you're a new asset manager. But our one strength, and which is why I'm so excited for your listeners and for Stockcard, is our one strength was we were able to produce good, high quality content that people wanted to read. And that's all we focused on. And it's not glamorous. There's no secret. It's just keep writing good quality content and engaging on Twitter and other areas. And we've been able to raise more assets in our funds than in iShares, for example. And we've seen that now with our fund sponsors that we help launch, folks that are just financial content. They publish a newsletter. They're doing something that's in the direct content space, and they have generated tremendous followings, and it provides a base of both assets and also credibility that the big shops can't match. So that's why I'm bullish. I see that this is creating a level playing field where folks that couldn't compete 10, 20 years ago because they weren't part of the old boys club that knew the right distribution channels. Well, now you're just going to make your own distribution channel, and you don't need the old boys club to succeed anymore. So that's why I'm bullish.
That's fantastic. Yeah, I'm with you. Obviously, the distribution side, they used to be create the product, then go after the distribution. Now you have the distribution as a content creator, so you cannot create the product. Brian, maybe we switch to you, and sort of similar question, but kind of maybe go back to think about when you were at Invesco, and if you had heard something like, oh, financial content creators going to now become fund managers, or they have the aspirations to do it, what would have been your reaction back then, and how do you what do you think the reaction is right now from your experience and what you hear in the industry?
Sure, it's a great question, and I think it's just really an interesting time. And we've certainly seen it before where you've had large figures, people, fund managers historically, going all the way back to like Fidelity and Peter Lynch, who have amassed a significant following among retail investors. Back in the day, going back multiple decades now to the Peter Lynch era, however, it was much more challenging to really build that type of a persona and establish yourself as a personal brand in the way that financial content creators can do so today. So there's a couple of things going on. On the one hand, we continue to see the rise of index funds. So these are, passive funds that are following an index, and that will continue to be a really important and big building block for portfolios. But the story that comes with financial content creators and potentially asset allocators who are picking individual stocks and building that into a portfolio offers that opportunity for the potential to outperform, as well as a story, more of an emotional connection where you can really start through the power of social media and the messaging and the audience that they're building, creating a real feeling and enthusiasm, as well as a connection to your money that you just don't have if you're simply setting it and forgetting it in an index fund. You start to know the story of the stocks within your portfolio. And of course, that can be dangerous if you get perhaps overly invested in one particular stock and losing sight of the benefits of diversification. But I think there's real value in consumers, and increasingly we're seeing a younger demographic now getting more enthusiastic about investing, which generally is terrific. We know we've got kind of the meme stock issues out there where we've got to be careful about overly allocating to just one particular stock. But in general, the enthusiasm and the ongoing interest in working with storytellers that have a solid thought process behind the stocks that they're picking for portfolios, I think ultimately is a great long-term trend and beneficial to get more people in the market, and ultimately for good reason.
Yeah, that makes a lot of sense. And I wish we had Perth joining us. I know she's in the attendees. She hasn't just been able to join as a panelist. Hopefully she can work with Shama, who is the host on the session. Perth, if you hear us, work with Shama, so hopefully we can get you on as a panelist. But I guess recently I had a conversation with a VC friend of mine, venture capitalist friend of mine, and then he said his perception of content creators, of financial content creators, are these guys sitting in the basement of their parents and they're just pumping stocks. So that was his point of view. Obviously, as a company who collaborates with content creators, we've just spoken with 3 of them in the previous panel. We think that's definitely not representative of these kind of this sort of like community of financial content creators. But I mean, let's try to have a conversation about how, when you compare a financial content creator and a traditional fund manager, where do you think a financial content creator needs to get involved, and what kind of skill sets and what kind of maybe network and relationship and things like that they have to create or build or acquire to become a fund manager, to make that transition? And I guess maybe Patrick, if you want to take that question.
Yeah, I think you need passion. And I'm not trying to sound cliche here, but content creators that I believe have the traits to succeed, and Perth Tolle is one of them, are people who have a genuine story and who want to deliver that story and are not going to get dissuaded by the ups and downs of the market. let's take Perth, for example. Perth's story will move you to tears, is why she believes that totalitarian regimes are not the funds or not the regimes to invest in. Right. And she's been beating that drum when China was outperforming the market by 10, 20%, and she's beating the drum now. And you compare that authenticity and that sincerity versus an ESG fund manager that claims to be ESG, but then also louds the benefits of totalitarian stability, right? It's tough to be both, right? And I think the general marketplace, there's such a hunger for authenticity and truth and connection that is what, to me, a financial creator needs. Everything else, in my view, can be outsourced. You need a back office, outsource it. You need a lawyer to tell you what you can and can't say on a podcast, pay for it, right? But the one thing that you can't replace and that you can't outsource is your story and your conviction and, frankly, your grit to just, keep working that network and building. So if I were to say, what skills do you need? You need to be a good storyteller, a good writer. You need to be comfortable putting yourself out there. You need to be comfortable disrupting a very entrenched, sadly, primarily male industry. I mean, Perth is great. She kicks in doors and gets in. So I'd say just be tough and tell your story and be honest, and you'll do well.
Yeah, that makes a lot of sense. And I love it. Basically, everything else is probably the skills that you can acquire or hire, but having a genuine story or having the grit is very difficult to develop. I mean, you could do that, but a lot of these creators have that already. So that fits into their goals. Brian, anything you want to add to it before we move to the next question?
Sure. I think the passion is really important. And with a lot of the financial creators that are out there, there's generally an investing theme or even an industry sector where that passion really exists. And one thing to just keep in mind is we've been in this really bull market that at some point, history tells us, will turn the other direction. And we know there are going to be points in time where certain sectors outperform, and then there are other times when they're going to falter. And so having that education, that knowledge to be able to look not only passionately at these potentially innovative and game-changing stocks that many people are focused on as financial creators, but then to also look through that lens of fundamental valuation to understand where certain companies trade, and if in fact within that sector there may be some that are better values than the others, or even points at time where you would want to be educating your audience on the benefits of diversifying away from that particular area of passion or sector to, especially at points in time where that particular asset class may be overinflated relative to valuations traditionally. So that's, I definitely think, something to watch out for.
Yeah, fantastic. That makes a lot of sense. Sort of like, how would you prepare for these like ups and downs of cycles of the market and to stay a content creator, but then also make sure you have the right return. So for fun to perform, basically. So I'll see Perth's face. Welcome. Thanks for joining. I'm glad that we were able to fix the technical issues. It's not you. All day we've had technical issues with live stream and with joining Zoom and all that good stuff. So don't feel bad at all. I think we're going to have a conversation with the support people at the end after the summit. But anyways, do you want to say a quick say hi? And then I have the right question for you right after. Then you say hi.
Hi, I'm Perth Tolle. I'm the founder of Life and Liberty Indexes. We run the index that the FRDM Freedom 100 Emerging Markets ETF is based on.
Fantastic. Thanks for joining. Just before you join, Patrick was talking about how you have the story that if we hear your story, people are gonna we can't hold ourselves with crying. So I gotta ask that about that story, but maybe just building on the idea of having a story. So you are a kind of person who is a content creator, but also you are a fund manager. So maybe you were first fund manager and then you use that as storytelling that all the creators are good at it to be able to raise money and be able to manage your fund. So from your point of view, how have you used this rise of content creators, rise of social storytelling, rise of creating communities around a specific story and cause for the growth of your fund and your company?
Yeah, so basically, we launched the Freedom 100 ETF out of scratch, and it's very bootstrapped. So it's me, one person as the sponsor of the ETF. ETF architect, where Patrick is the fund issuer, and the fund advisor. So I just did whatever we could afford. It as Patrick mentioned, we're running up against big guys with a lot of money, a lot of distribution, and as a one person creator, I didn't have any of that, and so I had to do content because it's the only thing that I could afford. And so and by content, I just mean very scalable things like we had a couple of investor letters. We do some video, a lot of podcasts, and some media like TV, print, things like that. And I have other content creators like Kyla Scanlon and some others that help us with content as well. So our entire approach is basically telling the story through our content, and then people that like our story come on board as an investor, and we make it very easy for them to do so through the ETF. We never could afford a sales team, so we never really had any sales team, and we've gone from 0 to 100 million through that alone. Never had a sales team. So I think that's the power of content, and we did it because we had to. But I think it's becoming more of a preferred choice by investors more and more.
Yeah. Well, first of all, congrats, like passing the 100 million in asset under management. I'm sure it's not easy, and it's like really deserves a big round of applause for what you do and the story you say and the product you created. So congrats on that. Yeah, definitely, I'm 100% with you in terms of the power of content. So I have a question, but I think we all agree on it. We've seen examples of content creators is branching into different beyond content. So meet Kevin, who is a very big content creator, financial content creator. He wanted to become governor of California, and he ran a very good campaign and used his platform and his followers to basically communicate his goals. We've seen Brandon Turner, who's like a podcaster, create this real estate fund. So he talks about his real estate investments, and then he brings it back into his fund so people can invest with him. I guess we kind of talked about it, but maybe we build on top of it. Do you think these are sort of like one-off movements now because of the market being bullish and because markets keep going up, sort of stonks always go up type thing? Or is there more legs to the content creator movements to branch into, well, fund manager, politics and everything else? What are the signs you've seen that tells you this might not be just like a one-off movement and not because stocks only go up basically, and it actually has more legs? Brian, maybe do you want to take that?
Sure. I'll chime in with a couple of thoughts here. And, again, I think as Patrick was saying earlier, this concept of distribution and just that captive audience that so many content creators have established is incredibly powerful. I'm sure, as Perth has suggested, getting to that 100 million mark, it really comes down to having that story, a compelling story, and ultimately that audience and distribution. So I think we'll see more of that. And just almost by definition, the law of large numbers, with so many financial content creators out there, there will be some that stand the test of time. That cream will rise to the top. And so if we do have a bear market and a couple of years from now, there are going to be many names that we may be familiar with today that are starting to rise, that disappear, but others that are going to be more persistent. Their audience is only going to continue to grow. Their following will continue to grow. And in the same way that you see a mutual fund universe historically that's been thousands of funds, there's only going to be a small percentage of those that are really the 5-star funds, those that rise to the top and that perform consistently year after year. And even those funds will have struggles, but the strong performance, enduring performance from those managers that really understand what they're doing and have a tried and true strategy are the ones that are going to survive. I think we'll see the exact same thing in the financial content creator community as well.
Mm-hmm. Fantastic. Yeah, I agree with you. Well, in the interest of time, since we have only a couple more minutes, I do want to tackle the regulatory stuff. And I think one of the reasons I wanted to have a panel who come from a financial services industry background is that understanding of the regulatory space. And I guess this question, I'll go with Patrick and then Perth and then Brian. What do you think are the barriers from a regulatory point of view ahead of a content creator to be able to be a fund manager? Or is there positive movements in the SEC side of regulatory space that you see would facilitate this transition from being a creator to become a fund manager? Patrick, to you.
Yeah, so I'll be perfectly honest. I think compliance and regulatory issues is kind of like exercise. You dread getting up in the morning to do it, but once you're kind of doing it, it's not that hard. And what differentiates what differentiates a content creator that gets it versus doesn't is if you have a content creator that's willing to read the rules, write them down, understand a framework, you can do a lot of stuff. There's no regulation against talking about your strategy, about your beliefs, about what you want to do, and it's very easy for people to put together what your passion is versus what your fun may be. And then there's a mechanism to drive people to that site. So for me, I think people hear regulators or SEC and they freak out and just, oh, this is hard and how can we compete? That's a misnomer, but it's just like anything else. It's just like a blog post. Writing that first blog post as a content creator, probably pretty painful, but now it's second nature. I'd say it's the same thing with the regulatory side, in my view.
I love it. That's a really good perspective. Perth, do you have anything to add from your experience going through regulatory side of running a fund? I think you're on mute. Let's unmute you.
Okay, sorry. Yeah, no, I agree with Patrick there. And it's important to work with a firm that has the partnership kind of mentality to help you through that stuff as well. I think is important. And Patrick has done that for me on the ETF architect side. So yeah, that's very important to just kind of understand the rules and then just go from there, because I think the more specifically you understand, the easier it is for you to comply. So it's important to have that partner that helps you get there. But also, I think, you see the big firms, this kind of goes into your last question as well, the big firms that have the same plumbing as us, but that have a lot more distribution capabilities and sales capabilities doing content creation now. So it can be done even with those guys' lawyers. So absolutely, I think for the smaller firms, the independent firms like us, it can be done as well.
Nice. Great. Brian, do you want to sort of like bring in the new SEC marketing tool rule that's coming in effect, and how could that help content creators, or whether it would help content creators to be able to do this better and more easier, or an easier way?
Sure. So the new SEC marketing rule, I think, is definitely a reflection of the SEC taking a very contemporary look at the consumer today, as this rule for the first time is going to allow financial advisors to solicit, to ask for reviews from their clients, and then bring those reviews online so that more people can understand what they do. And that's not only applicable to financial advisors, but this rule can also apply to investment managers to a degree as well. And so the opportunity here from the SEC's point of view is that we collectively as an industry can now catch up with other industries where the consumer is looking to understand how much they can trust that financial advisor or investment manager. And as it pertains to products like an ETF, there's naturally going to be those performance metrics, which are just kind of the facts of how a product has performed. But again, the opportunity to perhaps have ratings and reviews of portfolio managers, the people who are behind the product, that's more qualitative and more subjective, providing an understanding of how effective a communicator that portfolio manager is and how good of a job they're doing in providing education to consumers. I think that becomes a real opportunity down the road, where you could potentially have the ability to look at traditional ratings like Morningstar that are a reflection solely of performance, but others to say, how good of a job does that portfolio manager do connecting to their investors, his or her investors, and really helping them understand the investments that they're choosing to buy and choose to sell, and not only feel more connected emotionally to that portfolio, but just more educated and comfortable and confident that they're in the right portfolio for their needs.
That makes sense. Yeah, so there's like a soft side. There's a soft side. If you're a content creator and you have a community that believe in you and trust you, your investor probably, or early investors, care about that as much as the performance. Obviously, you have to have the performance, but also what kind of exclusive content they get, how do they treat them, what kind of update this, and how do they explain the logic behind their decisions and all that good stuff. Even just like having a community and having these like kinship, or like, being friend with the fund manager, those things matter in the world of content creators. So we have just maybe 1 or 2 minutes. I guess I want to ask you to send an SEC and the regulatory bodies one message in support of content creators being able to I mean, anyone, content creators and financial managers, fund managers, to be able to run their businesses using these social media tools that is available to us. What would you recommend? What would you ask SEC to do to facilitate this path a little bit easier, make it a little bit easier? Perth, I will start from you.
You know what? I think anything that the regulators do, we find a way to comply. But I think it would be easier that if we could actually talk about, say, the name of our fund or the ticker, because I think that's just kind of weird that we can't say that and can say everything else. I mean, as long as it's not misinformation, I think that's like a weird, quirky thing that a lot of times we have to get things compliance approved just because, the name or the ticker was said, which seems kind of inefficient. So that's one thing I would probably ask to change.
Well, that's good. Yes, maybe we should create an open letter to SEC after this one. Brian, I'll go to you, and then I'll go to Patrick to wrap it up at the end.
Well, I would say the ticker FRDM, if other people can't say it, I'm happy to contribute that. And I agree with Perth. I think it's frustrating. I mean, you look at Dave Portnoy and the role that he played working with Van Eck. I won't give that ticker, but really pushing the regulatory line as to what you can do as a financial influencer or just an influencer in general within the regulatory framework. And I think there's still some question there as to whether that was truly within it or maybe crossing a line, because we do want to work within that regulatory framework. We want to have compliance teams that understand the regulatory framework and can give you that leeway to succeed, but not feel that you're being outmaneuvered by people that are maybe crossing the line, taking advantage of it, or not being reprimanded by the SEC, in which point you find yourself saying, well, shoot, if other people can cross that line, should we do the same? Because now that that line has in fact moved, but in fact, you don't really know that if the regulators don't come out and provide that type of guidance to help you understand that. So that's always tricky. It's definitely frustrating. I've been encouraged with both the SEC marketing rule as well as recent commentary from the SEC that they do recognize clearly the growth of these more innovative areas, whether it's cryptocurrencies or the content creator community in general. So hopefully we'll continue to see action that provides more wiggle room or more flexibility for content creators going forward, and hopefully sooner rather than later.
Makes sense. Thank you. Patrick, any last message for the SEC?
For every rule you pass, you have to cut 2 out. Let me tell you something, content creators. One thing that really ticks me off is you read these SEC proposals on new regulations, and all the big shops love them, and they know that they can afford it. They can just throw their in-house legal team of 20 lawyers on it, while small content creators can't. And that, to me, is the one bias that needs to be removed. Because the reason why this is such a great place to raise capital and trade is because it's a free country and because it cares about entrepreneurs. And I think with the best of intentions, sometimes regulators overlook the impact these incremental regulatory changes and nits make it harder to launch products.
That makes a lot of sense. And I love it that how 3 of you, that's why you guys are here. You have such a good tactical if they change it tomorrow, it will have an impact on everyone's business tomorrow. So I love it. I love that message to SEC. Hopefully we can be the start of that kind of conversation and share these kind of things with the SEC and regulators. Thank you. We're at the end of our time. This was fantastic. We'll have you guys hopefully join in future editions of the Creator Summit, and I'll let you guys go and take a break. And everybody on live stream, on Twitter, LinkedIn, and on Zoom, we're going to take about 5 to 10 minutes break, and then at 11:30 we're going to talk with Dustin from Creative Juice, and we'll talk about trends in funding the creator economy. Thank you, everyone. Thank you, Patrick. Thank you, Brian. Thank you, Perth, and talk to you soon.
Thank you.
If you are a financial creator, it's time to join us.